Most people think financial crises start with stock market crashes, big banks collapsing, or dramatic news headlines. But what if the next big crisis doesn't start where everyone is looking? What if the real danger is building quietly behind the scenes in a part of the financial world that most people don't even know exists? Today, we're talking about the shadow banking system, a hidden financial world that works outside normal banks, outside normal rules, and outside what most people understand. And many experts believe this is where the next global financial crash could begin. We've been told again and again that traditional banks are safe. We hear that they are well regulated, that they have strong balance sheets, and that the system is better protected than ever before. But that confidence might be misleading, because the biggest risks today are not inside the banks. We see they're inside the large, invisible system we don't see. Trillions of dollars move through this hidden world every single day, and most people do not even realize it exists. And yet this system is now under serious pressure. Something is breaking. Something dangerous is forming under the surface. To understand how we reached this point, we need to go back in time. The shadow banking system didn't appear suddenly. It grew slowly over decades. In the 1970s and 1980s, many financial rules were loosened or removed. Interest rate limits were ended, new investment products were created, and global money started moving faster than regulators could follow. Banks were given new rules that limited how much they could lend and how much risk they could take. But businesses still needed money. Investors still wanted returns. And the economy still needed credit. So instead of banks doing all the lending, new players stepped in. Money market funds, special investment vehicles, hedge funds, private lenders, off-balance sheet companies, and repo markets began doing the job that banks used to do. These were not called shadow banks at the time. They were simply seen as new financial tools. But they worked a lot like banks. They took money. They lent money. They created credit, yet they weren't regulated like banks. They didn't have to follow the same safety rules. They could take more risk and grow faster. And that is exactly what they did. By the 1990s and early 2000s, this shadow system had become huge. It helped fuel the housing boom, the corporate lending boom, and the overall economic growth we saw during those years. But it also created hidden dangers. Many of these shadow institutions borrowed money for very short periods, sometimes just overnight, and used that money to buy long-term assets like mortgages or bonds. This created a dangerous mismatch. If their short-term funding disappeared, they would collapse immediately. And that is exactly what happened in 2008. When the housing market crashed, many shadow banks froze. Money market funds panicked. Mortgage-backed securities lost value. Repo markets broke down. Liquidity vanished. And suddenly, the entire global financial system was in danger. The 2008 crash was caused just by big banks. It was caused by the shadow banking world collapsing under its own weight. After the crisis, governments and regulators tried to fix the system, but they mainly focused on traditional banks. They forced banks to hold more cash, take less risk, and follow tougher rules. That made the banking system safer, but it also pushed even more financial activity into the shadows. Instead of fixing the core problem, we simply moved it somewhere else. And the place it moved to was far less regulated, far more fragile, and far, far larger. That's how we ended up here in 2025. The shadow banking system is now bigger than ever. Private credit has exploded. Hedge funds are lending money. Non-bank mortgage companies dominate the housing market. Repo markets carry trillions of dollars of borrowing every day. Companies that do not look like banks now control huge parts of the financial world. And now these companies are under massive pressure. So what's going wrong? To understand that, we need to look at how shadow banking works. Most shadow banks rely on something very simple but very dangerous. They borrow money cheaply for a short period of time and invest it in long-term assets. This works only when interest rates are low and stable. But today, interest rates have risen sharply. That means shadow banks now have to borrow at much higher costs. At the same time, the value of the assets they invested in things like bonds, real estate loans, in corporate debt has fallen. That puts them in a squeeze. Their costs are rising, their assets are falling, and their risk is growing. Some parts of the shadow system are already cracking. Repo markets have become unstable because the collateral backing them is worth less than before. Private credit funds are facing losses because many businesses that borrowed money from them can no longer pay it back. Non-bank mortgage lenders are struggling because rising interest rates have crushed the housing market, and money market funds are seeing stress as investors move money quickly in and out. These problems are not always visible because shadow banks are not required to report problems openly. They collapse silently until they collapse suddenly. This is the biggest danger. We can't see the crisis building. It doesn't show up until it's too late. Traditional banks might be stronger than before, but they're still connected to shadow banks in many ways. They lend to them, they rely on them, they invest with them. So if the shadow system collapses, the impact will still hit traditional banks. The entire financial network is connected. Another major problem is that central banks can't easily rescue this system. In 2008, they stepped in and saved almost everything. In 2020, they flooded the world with liquidity again. But today, inflation is still high. Rates are already elevated. Central banks can't just print more money to save shadow banks without making inflation worse. That means the safety net is thinner than before. This is why experts worry that the next crash could start quietly in the shadow system, then spread everywhere. It might begin with a funding freeze, meaning shadow banks can T-borrow the money they need to stay alive. That leads to forced selling of assets. Forced selling pushes prices down. Lower prices cause more losses. More losses lead to panic. Panic spreads to traditional banks, investors, markets, and governments. And all of this could happen quickly before the public even knows what's going on. The scary part is that we've seen all of this before. The 1998 hedge fund collapse, the 2008 mortgage crash, the 2019 repo freeze, and the 2020 liquidity panic had roots in the shadow system. History is repeating itself because the problem was never solved at the core. The world became dependent on shadow banking for credit, liquidity, and growth. And now that system is under strain. So what does this mean for the future? It means we need to watch indicators that most people ignore, things like repo markets, private credit defaults, mortgage lender bankruptcies, money market stress, and liquidity shortages. These will be the first signs of trouble. They will tell us what is happening behind the curtain before it becomes publicly visible. Now, let's talk about the key lessons from this whole story. First, the next financial crisis may not begin in traditional banks. It could begin in shadow banks, places most people don't even think about. Second, liquidity is the real lifeline of the financial world. When liquidity dries up, even strong institutions can collapse. Third, lack of transparency is the biggest danger. You cannot fix a problem you cannot see, and the shadow system is full of hidden risks. As we move forward, keep watching the quiet corners of the financial world, because the next big shock may come from the shadows, not from the places we expect. And when it hits, it could spread faster than anything we've seen before. If you found this explanation clearer and easier to understand, make sure to subscribe, turn on notifications, and stay with us. There's a lot happening in the global economy, and understanding these hidden systems can help you stay ahead of the next wave.